Hello everyone, my name is Thais Vilela and I'm an environmental economist. And in my previous videos we have been talking about environmental evaluation, what it is, the different methods and when to use each one of them. If you haven't seen those videos, I will leave the link to the environmental evaluation playlist in the description. Today we continue our discussion on valuation, taking it one step further with natural capital accounting. Environmental valuation estimates the monetary value of ecosystem services, while natural capital accounting provides a framework to organize and, when possible, integrate these values into national and corporate accounts. It is worth noting that the core of any natural capital accounting is the physical measurement of natural capital stocks and flows. Monetary valuation is desirable, but it depends on having reliable data and resources to conduct a comprehensive valuation. When we say natural capital, we are treating nature as a stock of assets, just like physical or human capital. The difference is that this stock regenerates and provides continuous flows of benefits, such as clean water, food, air filtration, carbon storage, and recreation. Economists use the term capital to refer to a productive asset, something that generates value. Just as machines or buildings produce economic output, ecosystem generates services that sustain life and the economy. Thus, it does make sense to include natural capital into conventional national and corporate accounting systems. By doing this, a country or a company can have a better sense of its wealth, can make smarter decisions, more aligned to sustainability strategies, and it also offers indicators or a way of monitoring sustainability goals. So in the previous slides, we've talked about why natural capital should be accounted for. Now we move to how it's actually done. The SEA, or System of Environmental Economic Accounting, is the main global framework for natural capital accounting. It's recognized as the statistical standard for linking environmental information to the economic system. SEA provides a structure to measure how natural resources and ecosystems contribute to the economy and how the economy in turn affects them. It includes two main components: the central framework, which focuses on individual environmental assets like water, energy, and timber, and their use by different sectors of the economy. And the ecosystem accounting, which looks at ecosystems as integrated systems. For example, a forest that simultaneously provides timber, carbon sequestration, and habitat for biodiversity. In practice, countries start by compiling physical accounts, such as the extent and condition of forests or water resources, and when possible, assign monetary value consistent with national accounts. The idea here is to make the invisible visible in economic statistics, to show that the degradation of nature is not like a vague environmental concern, but a measurable loss of national wealth. While the SEA focuses on governments and national statistics, we have the Natural Capital Protocol, which brings the same principles to the business world. Developed by the Natural Capital Coalition, it guides companies through a process to identify how their operations depend on and impact natural capital. However, it's worth mentioning that the protocol is not about producing official statistics, it's about informing business decisions. For example, understanding water risks in supply chains or the cost of land degradation for production. It follows a simple four-step process. Frame the question, why measure natural capital, scope what to include, which parts of the business and which ecosystem service matter most, measure and value the impacts and dependencies, often using the same valuation tools we've discussed in our previous lectures. And finally, apply these results, or apply the results, integrating them into planning, risk management, or investment decisions. So countries and organizations are already implementing these frameworks. In the CIA website, you can find several reports, such as the Annual Environmental Account Statistic of Bhutan for the year 2023, in which it presents several green economic indicators, such as carbon emissions, energy use, renewable and non-renewable resources, and biodiversity and ecosystem data. The report also presents environmental services and amenities, as well as policy responses and economic opportunities related to the environment. In the CIA website, you can also find like a table with the stage of implementation of each country and the link to more information. So if you are interested in a country specifically, it's worth taking a look at this table. We also have some examples from the private sector, such as Nestlé. Its initiative aligns with the natural capital protocol stages, particularly in framing the business case for natural capital, scope and material impacts and dependencies, measuring and valuing them, and applying the results to business decisions. So we move now to the limitations and challenges of natural capital accounting. I divided these into 4 groups. First, we have communication and interpretation challenges. There is a risk, misinterpretation risk. Stakeholders may see monetary values as market prices rather than indicators to inform decisions. Complexity versus usability. Highly detailed accounts can be like overwhelming, but at the same time, too much simplification can be misleading. So you have to find the balance. The second group is institutional and policy challenges. Integration into decision making is not automatic. Even if accounts exist, policymakers or business may not use them effectively. And we also have a challenge of coordination across agencies, because we know that natural capital spans sectors, making governance and data sharing difficult. We also have resource constraints. Implementing comprehensive natural capital accounting requires finance, technical capacity, and skilled personnel. So this might be an additional challenge as well. The third group is valuation challenges. Monetary valuation, as you might know, is complex and in some cases uncertain. Non-market values require assumptions and models that introduce uncertainty. We have methodological difference. We know that the choice of valuation method can yield very different estimates. We have the risk of oversimplification, reducing complex ecological functions to a single monetary number can mask important ecological relationships. The last group of challenges is the measurement challenges. It's very common to have like incomplete or inconsistent data. Many countries and sectors lack reliable biophysical or economic data on natural capital. Difficulty measuring ecosystem services. Some services like cultural or even like regulated service are hard to quantify, and physical or monetary terms. We have temporal and spatial variation. Natural capital stocks and flows change over time and across regions, making standardization difficult. All in all, natural capital account is a powerful tool without a doubt, but its usefulness depends on reliable data, careful evaluation, institutional support, and clear communication. So this is my last slide, and to conclude this brief lecture on natural capital accounting, I believe that there are two key takeaways from all I've said here. First, nature is a productive capital in the sense that it can be used as an input to the production of many goods and services, and it's alone produce services and contributes to human well-being and economic activity, providing not only benefit today, but in the future too. Second, natural capital accounting organize data systematically. So we have like physical stocks, ecosystem flows, and if possible, monetary valuation. All in all, natural capital is essential for both people and the economy. Yet, too often, as you know, these resources are undervalued or ignored, which can lead to environmental degradation, loss of biodiversity, and long-term costs. That is why integrating natural capital into national and corporate accounting is so important. And by using natural capital accounting, we can make these contributions visible, guide better decisions, and help ensure that ecosystems are preserved for future generations while supporting sustainability, economic resilience, and social well-being today. So with that, I conclude this lecture. As always, I hope it has been helpful to you. So see you in the next video. Bye.